Hi, it's Glenn Beck. Let's face it, these are uncertain times. We're bombarded with news of political chaos, economic instability, and a world that feels more unpredictable than ever. I talk to so many people who are wondering, what does all this mean for my retirement? Here's the truth. You can't afford to leave your financial future to chance. That's why you should talk to Steve and Elizabeth Holland and their team at the Holland Group, Retirement Wealth Advisors. I've known Steve and Elizabeth for many years. They are people you can trust. I trust them, and they understand the challenges we're facing and know how to help you protect what you've worked so hard to build. They help people just like you create a retirement plan that's built to weather the storm. No cookie-cutter solutions, just honest help from a team that truly cares about your future. Don't let the chaos rob you of your retirement. Call Steve and Elizabeth Holland and their team at the Holland Group Retirement Wealth Advisors now. 727-228-4674. That's 727-228-4674. Take control of your financial future today with the Holland Group.
This is Retirement Success with Steve and Elizabeth Holland and me, Todd M.J. Schmidt. For over 30 years, Steve and Elizabeth have been protecting your wealth or helping you create the retirement income that you need by creating inflation-adjusted, tax-advantaged, customized plans, because your retirement may be 20 to 30 years of unemployment. The Holland Group Retirement Wealth Advisors has the experience to take you to and through retirement. So let's make the rest of your life the best of your life. Welcome to Retirement Success from the Holland Group Retirement Wealth Advisors. Hey, everybody, it is me, MJ, Todd Schmidt, along with Steve and Elizabeth Holland from the Holland Group Retirement Wealth Advisors. And welcome to the program today. And there's a reality that we want to bring you up to speed on, and that is only about 15% of private sector workers today have access to a traditional pension. That means that 85% of Americans, your 401k is your pension. So the question is very simple. How do you turn a lump sum into a paycheck that lasts 30 to 40 years potentially? Steve, let's start here. What's the biggest mistake that people make when they retire with a big 401k?
Big 401k. I would say the biggest mistake is leaving the money there, because it's no longer your employer, it's your ex-employer. But a lot of people leave their 401k at their old employers. That's the biggest mistake.
That's true, because you know what, Steve? Hey, guys, remember me telling you that we have a client who actually had 13 401ks?
Yeah, that's crazy.
That he would just leave and said, you know what? I don't know what I'm doing. God knows, maybe let the money grow, or let me just leave it alone. Because people don't know exactly what to do with those funds, so they just leave it alone.
So I want to talk about the second biggest mistake, and I think this is where MJ was going. The second biggest mistake is thinking your retirement, it's just the next chapter of investing, and I'm going to do it the same way that I've been doing it for the last 30 or 40 years. I'm just going to stay in the market because look at the size of my balance. Look at my 401k. It's done incredibly well. But you know what? Those are called your accumulation years. You're climbing the mountain. You're saving, you're contributing, your dollar cost averaging. But now when you go into retirement, you're at the top of the mountain. Now you got to come down, right?
Jump off?
So no, don't jump off. No, you're descending. You're descending from the mountain. And statistically, most mountain accidents happen on the way down. So here's what I mean. When you're accumulating, when you're growing your wealth and the market drops, what do you have? You have a buying opportunity, right?
Yes.
So the market goes down to, like right now, we have a buying opportunity in the market because it's been volatile because of the conflict. What are we calling it a war yet? Or
no.
Do we still call it the Iran conflict?
Let's call it conflict because, when we were talking about tariffs, that was like the big news in the world,
Yeah, it was. So, yeah, I'll call it a conflict. We have a lot of volatility. Volatility is your friend when you are growing your wealth because you have opportunities. But when you're retired, when you're withdrawing money from your portfolio and the market drops, well, now you're talking about permanent damage. All right, because you're selling at a low. Volatility is your enemy. Volatility is not your friend when you're in retirement. Volatility is your enemy if you're withdrawing from your portfolio. So this is where the sequence of return risk enters. And if you retire in a downturn like 2008, 2020, when we had the early COVID crash, down 34% within several weeks of COVID, when you're withdrawing 4 to 6% at the same time, you're selling shares at losses that never get to recover, Elizabeth, never get to recover.
The word COVID really scares me, actually, so I don't ever want to live through something called COVID again.
Yeah, I kind of liked the traffic in Tampa Bay when everyone was locked down. There was just no traffic at all, and you can get from point A to point B very quickly. But, yeah, I'll agree with you. But we don't want that again.
No, we definitely don't want that again. So here's what most people think, and we see it because we hear it, because we live it every single day practically. If I have $1 million in my 401k, well, it isn't automatically going to be for you $40,000 a year for paycheck, right?
No.
That's not going to happen. Because if you withdraw $40,000 in a flat market like you're talking about, Steve, withdrawing $40,000 in a negative 25% market, well, guess what? You just have removed 5.3% instead of 4%. Now, when you do the math, that math compounds faster. And that is not a good way of really looking at, wow, I have $1 million. How many people do you know that say, I have about $1.5 million in my 401k, and I'm looking for an investment portfolio to sustain that. Nobody ever say, I have 1.5 and I got, gosh darn it, I'm going to have a lot of taxes to pay.
That's right. Yeah, because if you have $1 million in your 401k, you don't really have $1 million,
nope.
right? You got like 800,000 because it's going to be taxable on the way out.
So how can the Hollands help you out? Traditional pensions versus 401ks, there are so many decisions to be made. The last thing you want is to be left in a lurch where you end up with that lump sum and it is not managed properly. Any questions you might have? When we do these programs, when people listen, this invokes a lot of questions that people have regarding their full retirement package, regarding their full investment strategy. And this is what the Hollands offer to you. A fiduciary firm, which means that they are legally bound to operate in your best interests, meaning they have to operate according to what is good for you, not what's good for their company. That's how the Hollands have operated since 1993, a fiduciary firm working for the benefit of their clients just like you. If you have a simple question, if you would like the Hollands to give you a second opinion, give you a review of what you currently have, if something doesn't feel right, or if you think things can be tweaked better, this is where we recommend that you call the Hollands at 727-228-6449. Again, 727-228-6449 puts you right in touch with Steve and Elizabeth Holland, or the website is askthehollands.com. Do you have any questions about whether you are properly situated? And again, there's nothing wrong with getting that second opinion to make sure. You might think that you're in good shape, but how do you really know? This is where a second opinion can really come in handy. Again, this is complimentary. There's no cost to you. Just call the Hollands at 727-228-6449 or go to the website, askthehollands.com. All the contact information is on the website. In fact, in a few minutes, we'll tell you how you can get a discovery call where you pick the time of the date, whatever's convenient for you. We'll give you all those details in just a matter of moments. So, Steve and Elizabeth, let's talk about the math. There's a psychological shift from saver to spender. A few minutes ago, you went over some of the math. We talked about 2008. We talked about 2020, early in the COVID crash. We talked about, some of the facts and figures. So this isn't just math. This is a mindset also that our listeners should be aware of.
You are absolutely correct. I couldn't say it any better. You did such a great job. Maybe you need to say it again. But just so you know, that is a great, great question. People stare at, 800,000, right? 800,000 or 1.2, 1.5, as I mentioned earlier. And they say, I feel wealthy. I've got this money. I have an abundance of wealth. But they are terrified to spend the money. And this is why they don't know their safety income number.
Yep,
you know what, Steve?
That's so true. Yep.
MJ, you're a radio guy. How many advisors have you heard in the past talk about a safety income number?
Oh, that's come up many times. Well, listen, I can't keep track of how many radio shows and how many companies I've heard advertise on the radio here in the Tampa market. Over the last decades that I've been here, there have been easily 30 other companies that have come and gone.
That's right.
Yeah.
Yep.
But none of them have ever mentioned, they're all about, hey, come and let me show you what I can do for you. But no one really gets into the meat and potatoes about a safe income number. We do, because that's so important. That's crucial for people to know. And also, let's talk about, taxes. How taxes affect you when you're taking withdrawals out. It's so important for you to know that. Some people feel like, hey, here's the myth that I always hear is that I'm not working, I don't have to pay that much in taxes. But you know what? When you're taking money from your investments, or let's say if you have a pension coming in, and we talked about pension earlier, well, you know what? You're going to have some taxes when you take that withdrawal out. And you have to factor in taxes 1,000%. And here's the one that keeps people up at night because they're not sure about it. And that is, how long is my money going to last? And Steve, you and I have talked about this, and we bring income plans to clients, showing them what an income plan would look like that is tax adjusted on, then inflation adjusted. You have to have these two factors in. Of course, most retirees underspend early out because of fear. And then you know what happens? They get all excited and they feel, oh my gosh, I got this money. Then they overspend later, reacting to market swings.
Yeah, especially market swings. Yeah, you know what we haven't talked about in a long time is what we call the break-even burden. And the break-even burden is really looking at a loss. Like, for example, if you lose 35% in your portfolio, you've got to make 53.9% to make all that money back and break even. And a lot of people say, well, how can that be? If I lose 35%, don't I have to make 35% to make it back?
Think.
No, it doesn't work that way. If you lose 30%, or let's take a smaller loss. Let's say that you lose 20%. If you lose 20% in your portfolio, you've got to make 25% back to break even. So this is called the break-even burden, and it is a very, very big concern for people who retire and say, hey, I'm just going to stay invested the same way that I was invested when I made all this money, because obviously that was successful. When you get into retirement, you need a paycheck plan, not a portfolio statement, and that's going to mean that it means that building your money with purpose. You're setting aside dollars specifically to create predictable income, which we like to say the word sustainable. We say sustainable quite often because your income has got to be sustainable. We don't know if you're going to be retired for 10 years or you're going to be retired for 40 years, right? Nobody knows. Nobody has a crystal ball that actually works. You may live to age 95. My mom is currently
I was just about to say that.
97.
Right. How old were your mom when she retired?
I think she was 64, 65 years old.
She didn't hit 65 before she retired?
No, I think it was right about that. So she's been retired already for 30 years.
Wow.
Yeah.
So that's a good benchmark, really. And you know what? The good news is good planning. I mean, of course, you're her financial advisor, but good planning. She is sustainable. She pays her money, pays her taxes. She's not happy about it,
right,
but she pays taxes every single year. But the bottom line is that she is able to sustain her lifestyle, and that's great planning.
Well, I was concerned, and now I feel much better because you said good planning earlier, and then you just finished your sentence with great planning, and thank you very much because I take that as a compliment because I have been her only advisor for more than 30 years. But, the bottom line is you have to, when you grow your wealth, you have to realize one thing. I'm growing my wealth. I'm taking some risk because of one thing, inflation. I've got to have an inflation fighter, but you have to remember to protect your wealth as well, protecting a portion of your wealth in safer assets so market swings don't derail your plan. This is a distribution strategy, and you've got to have that inside your portfolio.
So here's what you can do. You can go to the website, askthehollands.com. At the very top of the page, you'll see the Holland logo. Right below the Holland Group Retirement Wealth Advisors logo, you'll see a little line that says, click here for a discovery call. Go ahead and do that. And then you pick the time and date that is good for you. You know, usually when you make an appointment, they have to look, oh, we have an appointment, we have an opening here. What about Wednesday at 2? What about May 29th at 7 p.m.? With the Hollands, if you click on Discovery Call, you pick the time and date that's best for you. How convenient is that? So go to askthehollands.com, very top of the page, click on Discovery Call, and you pick the time and date that you would like to speak with the Holland Group Retirement Wealth Advisor. Simple as that. Or you can use the old-fashioned method and just call the office, where there's nothing wrong with that either. 727-228-6449. That's 727-228-6449 for the Holland Group Retirement Wealth Advisors. That's 727-228-6449 to schedule your complimentary, no obligation retirement income review. Let's move into the new tax reality. We've got the one big, beautiful bill and bracket management. So, Elizabeth, this should open up the door, and you guys can go for a long time on this.
Oh, boy. You know what? I must sound like a geek because I love talking about taxes.
Right.
Do I sound like a geek to you, Steve?
Yes, that's why some nights when I can't sleep, I say to you, honey, can you talk to me about taxes? Because I really need to get some rest.
MJ, can I call you and talk to you about taxes?
Yeah. Just call my cell phone anytime, day or night, 24/7.
Okay.
And if I'm not available, if you get voicemail, just text. Just type the whole monologue out about the taxes, and I'll just respond.
Oh, good. See,
All right.
I got someone I can talk to.
You know what
That's
you
great.
should do? You should text AJ or
MJ.
MJ. I'm thinking about my nephew. You should text MJ one of the IRS publications.
That's boring. That's boring.
150 pages.
Okay, so the one big beautiful bill passed July of 2025 that locked in the lower tax bracket permanently. That removed the sunset panic that we all were talking about could happen, but it didn't remove bad planning. For 2026, the 12% bracket for married couple extended to over $100,000 taxable income, jumped to 22% happening fast after that. So we saw that. So if your 401k is pre-tax, wow, every withdrawal is now ordinary income. And of course, withdrawal, this is what we're seeing, withdrawal too much. Well, we've seen our own clients do this. My son or my daughter is buying a new house. Well, that wasn't part of the financial plan we put together. I like to give them $100,000 for a down payment to help them out.
Jeez, everyone wants parents like that, you know.
We didn't have parents like that.
We certainly didn't.
No.
We got a Hallmark card. Congratulations on your new house. Here's a card for you.
And it didn't even look like the house. But okay, so here's another big one: a wedding. My gosh, why do people spend so much money on a wedding?
That's right. Yep.
I mean, wedding is great and wonderful, you know.
Do you remember I told Alicia and Rachel when they were planning their wedding, I said, listen, you tell me when your mother and I had a $50,000 party. We never had a $50,000 party. Never. Spend that money. If you want us to spend that money, let us contribute that money towards a down payment on your first house or something.
You know, it's very interesting, Steve, you bring this up because my wife and I, Michelle, we would do things totally differently. Instead of having a big wedding, we would probably just take a donation from the family. Instead of having a massive wedding with a massive bill, just, help us out with the first house. Instead of let's have a small, little, tiny family wedding and not have the gigantic catered ballroom and all that, you know?
And we see that. We see how people get, even $50,000 is nothing anymore.
Yeah.
Okay, that's like just
that pays for the band. No, well, then maybe if you hire a well-known band, but
if that's ZZ Top, it's like 100,000, whatever. But bottom line is that people are very extravagant, and with their withdrawal, they withdraw too much money too quickly. A new car. Oh my gosh, I need a new car. We were talking about this. Pretty soon Amia is going to look for her driver's license, get her permit and all that stuff. She's going to want a new car. And you told me you're going to get a bicycle. But we're looking for a new car.
That's right.
Here's a big thing that we see, and we see with so many families.
And by the way, I just want to clarify, Amia is our oldest granddaughter, who is now 14. She's going to be 15 years old this year.
Yeah, she is.
Oh, my gosh.
The big vacation. Let's take some money out because we got the money. Let's go on forget about a cruise. Let's go to a different country.
Right.
Let's go and let's really have a really rememberable, honorable, wonderful time. Let's have a big vacation with all the family. Here's what really happened. This can happen, and it can accidentally trigger a higher tax bracket.
Definitely.
It increases your Medicare and your IRMA premium. Tax up to 85% on your Social Security, which people don't really think about it. That's called a Social Security tax torpedo.
Right. Torpedo. Yeah, that's for sure. So you cross $44,000 combined income. Now, this is married filing a joint tax return. Up to 85% of your Social Security becomes taxable income, provisional income, and you've got to report every single dollar of that 85%. But wait a minute, Elizabeth, what about the big, beautiful bill? Isn't Social Security taxation a thing of the past? And the answer is no. I'm sorry, it is not.
It doesn't happen that way.
There is a credit. You'll get a credit, but it's not going to wipe out your Social Security taxation. So poor withdrawal planning creates one thing, a double tax hit.
So we look at it and say, okay, how can we prevent this with our clients? We tell our clients, when would be the time to take Social Security? What's a good time for you to start doing that? And we give them an idea because not everyone should jump at taking Social Security at age 62. Go ahead. If you can wait for your full retirement age to take Social Security. And we'll show you exactly how that works right here at the Holland Group. This is the benefit of working with the Holland Group.
If we have struck any nerve, if we've caused you to think or question, that is the purpose of this show. The last thing the Hollands want is for you to be left in the dark, have a problem down the road where you don't have a proper plan. It is not even remotely beneficial to your retirement years, which you worked so hard for, you've dreamt about. If you have any concerns, any questions, want to get a second opinion, just call the Hollands. 727-228-6449. That's 727-228-6449. For Steve and Elizabeth Holland at the Holland Group Retirement Wealth Advisors, a fiduciary firm working for the clients. That's you. Your best interest. If you want to get a discovery call, it's simple. You can either call the office at 727-228-6449 or just click on the website. Go to askthehollands.com, top of the page. You'll see click here for a discovery call. You pick the time and date. And before you know it, you're talking with the Hollands, getting that second opinion, getting written plans. They want to do written plans for you to show you what they would do differently. 727-228-6449 for Steve and Elizabeth Holland. When we get back, second half hour, this is a big question, folks. If this doesn't keep you listening, I don't know what will. The question when we get back will be answered. How much of your 401k belongs to the IRS? And that's next.
Hey, Sean Hannity here. Unless you want to pay more in taxes than you have to, you should pay attention to what I'm about to tell you. As you know, President Trump's tax cuts have been extended thanks to the one big, beautiful bill. What you may not know is that right now, right this second, is the time to start taking advantage and locking in lower tax rates. Do you know who can help you get it done? Steve and Elizabeth Holland and their team at the Holland Group Retirement Wealth Advisors. Now, all you need to do is call 727-228-4673. That's 727-228-4673. Now, you don't want your hard-earned money going to Uncle Sam to be wasted. It's your money. Keep more of it. Steve, Elizabeth, and the team at the Holland Group can show you how. 727-228-4673. Don't wait. Find out how you could be saving in taxes for retirement with the help of Stephen and Elizabeth Holland and their team at the Holland Group Retirement Wealth Advisors. 727-228-4673.
Welcome back to Retirement Success from the Holland Group Retirement Wealth Advisors. It's MJ, Todd Schmidt here once again with Steve and Elizabeth Holland. Half hour to go. If my little cliffhanger teaser didn't keep you listening, I don't know what will. The question I posed moments ago was how much of your 401k belongs to the IRS? Elizabeth?
You know what, Steve and I know we talk about business all the time, but Steve, you and I were just talking about this, weren't we?
We were. We were just talking about this like 10 minutes ago when somebody states, hey, I've got $1 million in my 401k. And we say, yeah, you really don't, because try pulling that million out. You're going to pull that out and you're going to end up with maybe 800,000, maybe even less, depending on how much you pull out each year.
So when I do a 401k rollover with an individual who just came on board as a client, or our clients who have had a 401k and forgot about it, all of this stuff, we see it all. I think we could write our own book, a third book, on exactly all the stories we have heard about 401ks.
You bet.
So in reference to if you mentioned, if you have $1 million in a pre-tax 401k, guess what? You don't own it all. You have a friend. You have maybe not the best friend you can have, or not the kind of friend you want to have,
right?
But you have a friend, because all that money is not yours. If your blended tax rate is, in retirement is between 18% to 22%, keep this in mind: 180,000 to 220,000 already belongs to that friend.
Right.
And that friend just loves you to pieces.
You bet.
And that is the IRS.
Because they want some of what you got.
Yes. And of course, at age 73, that friend reminds you of your age. You're 73, so guess what?
Yeah.
It is your required minimum distribution, which is called your RMD. It is mandatory that you start pulling that money, because if your friend don't get that money, they're gonna give you a penalty.
That friend always has their hand out, but what do they really do for you?
Well, you know what?
Nothing.
Exactly. Yeah.
So you don't control those withdrawals anymore. So this is how it works. You can, of course, they said you can push you into the higher. This is what happens, and we see it. It pushes you into higher tax bracket. Again, as I mentioned, it increased your Medicare premium. It increased your Social Security taxation. This is why when you work with us at the Holland Group, we will show you a strategy that is working for so many of our clients, and that's a Roth conversion, because it does matter. Strategic tax filling is about 12% or so, and we can save you about 22% when we do this for you. So keep one thing in mind: the Roth conversion is a beautiful thing. You can start that Roth conversion and you can pay the taxes on it. And what we do, people goes, oh my gosh, that's a lot of taxes I'm going to have to pay. We'll show it to you in increments. We do a tax return that's hypothetical and give you some ideas and give you the concept of how it's going to work for you, what that tax burden looks like for you, and you decide which one suits you best.
So instead of guessing, you manage tax brackets, kind of like you manage your investments, right, Steve?
Yeah, you definitely do. Tax planning is retirement planning. And if you're working with a firm that calls themselves a retirement planning firm and they don't do taxes, don't walk, run out of their office because they're not doing what is best for you. I've been saying this for well over 30 years. The right hand is your stocks, your bonds, your mutual funds, all your investments that you have. The left hand is your tax return. The right hand has got to talk to the left hand every single year. It's not just Roth conversions. There are many different tax reduction strategies that we implement year after year after year. I think it's so important that people get that. And MJ, you say it all the time. You remind people that, look, if you don't have tax planning, what's the analogy you use? It's kind of like driving a car with 3 wheels instead of 4.
Yeah, you're driving on US 19 or you're on the Howard Franklin Bridge and you're scraping your axle on the ground because you're missing a tire. I mean, that's seriously, that's the best way I can put this on how important tax planning is. You need 4 good tires on your car. And if you're missing a tire, man, that's a disaster. And if you don't have tax planning in your retirement and your investment strategy, that is a disaster. Also, notice that I'm mentioning US 19 and the Howard Franklin Bridge. Why? Because this is a local show. This is not one of these phony national shows pretending to be a local show by just using a local phone number.
Right. And you know what I've noticed lately? That some of these companies, they do a separate commercial that say, well, in the Tampa Bay area.
Oh, here in Tampa.
Or here in Tampa. They make it sound like they live here. They don't. They're in multiple markets all over the place. And, there's nothing wrong with that if you're okay with that. But, when you come here to the Holland Group, you're going to sit down. You're going to meet me. You're going to meet Elizabeth. You're going to meet our team. We are here every single day. You know what cracks me up, Elizabeth, when you call somebody? They say, oh, my gosh, Elizabeth, it's you? Is it really you?
Yep.
I thought you just did TV and radio.
No. No.
You actually go to work? You work at the Holland Group? Oh, my gosh. I wasn't aware of that.
Well, what a shocker. That the people you hear, you're actually going to go to their office in Clearwater, right off US 19, and you're not going to some, little small boiler room office that's set up by a big company that's based, 15 states away.
Right. Exactly. Yeah.
You're going to meet us. You're going to see us. And you're right, Steve. People do get that very, wow, like I am actually making that phone call. You're right. Because this is what I say. If you took the time to go and plan a discovery call, schedule a discovery call, you took the time to text us and ask some questions. You took the time to go online and tell us this is your situation. Yep. How can I help? It is really my responsibility to reach out to you and help you.
Right. A couple years ago, we had a new guy come in, and he sat down with me, and he said, I got to tell you something. I listened to your radio show. I listened to so-and-so's radio show as well, and I was going to call them and go in and sit down with them. But then I realized, what do I want? What do I really want? I hear this other guy on the radio. I will never, ever, ever get to meet that person. That's not who I'm going to be dealing with. But I'm told that if I go over to the Hollands, I'm going to sit with Steve. I'm going to sit with Elizabeth. I'm going to sit, I'm actually going to meet you guys. And that's what I really want. Yeah. I want to know that the people who are running this firm are really looking over my stuff.
And I don't want to get too sidetracked here, but also some of these companies that pretend to be local, sometimes they're offering a free will and trust. What is that all about? How could they possibly do that and really have the client covered?
Yeah, I mean, we looked at that a couple years ago, so they're pretty much a couple years behind. It's not a good idea because the person who drafts, the author, all right, let's call it what it is, the author of your estate plan it should be an attorney that you sit down with and talk with them and tell them the dynamics of your family, what's important to you, what's not important to you. It should not be an internet form that you fill in the blanks and you'll never, ever sit down with that attorney. They don't really know anything about you, and they could be 2, 3, 5, 10 states away from you, and you're getting this free estate plan. Not a good idea at all. This is your life savings. Make sure you have it protected properly.
727-228-6449. The Hollands have been guiding people like you for over 30 years. This is the 33rd year here in 2026. The Hollands, they formed in 1993. A long time right here in the Tampa Bay area, and they'd love to help you. If you do not know what bracket your retirement income is going to land you in, That's like jumping into a pool without checking that there's water in the pool. Call. Make sure there's water in the pool. This is complimentary. There's no cost here. 727-228-6449. That's 727-228-6449 for the Holland Group Retirement Wealth Advisors. It is a simple phone call, or go to the website. Two ways to do this. You can go to askthehollands.com. All the contact information is on the website. Or also, may I recommend the discovery call? So some time ago, the Hollands said, how could we make this even easier for our listeners? You know, calling the office at 727-228-6449. That's pretty easy. But how can we make it even easier? And that is the top of the website. There's a link that says click here to book a discovery call. You click on that link at the very top of the Holland Group Retirement Wealth Advisors website, which is askthehollands.com. Very easy. Askthehollands.com, top of the page. Click for a discovery call. You pick the time and date that's best for you. So multiple ways to get a hold of the Hollands to make sure that you don't have regrets later on. If you missed the phone number, the website, we'll give it to you again in a few minutes. So grab a piece of paper and a pen. Any questions you have, get them ready, because the Hollands want to answer them. Simple as that. What about inflation? We've said this over and over and over again, and certainly we've seen inflation really ramp up over the past couple of years post-COVID. But inflation has been called the silent killer, and Elizabeth, this is an area that really gets your attention.
Yes, it does. But you know what got my attention really quick too, MJ? It was the fact about jumping into a pool that has no water. I mean, that's a scary thought by itself.
Yeah, I was thinking one word, ouch. That's really going to hurt.
Oh, actually, the pool is so dirty and disgusting and slimy and green, and you jump into it. Oh, gosh.
Oh,
gross.
no, I wasn't thinking about that. I was just thinking of the impact when you
jump into a pool.
jump into a pool with no water.
So they do say inflation is the silent killer. And here's the average inflation, as we all seen it or have heard about it, in 2025. It was about 3%. Doesn't sound that scary. 3%, you know, it's like,
Not
okay.
bad. Very doable.
Yeah.
We can manage that.
Yeah,
no
3%.
problem.
Hey, we're doing really good. So 3%, but over 20 years, 3% doubles the expenses. So what do we mean by that? It simply means that $50,000 today becomes roughly $90,000 in about 20 years. Now, is that rough? Is that something that we're looking for?
Yeah, you got my attention now, that's for sure.
And by the way, I did not see beef really went down in prices, okay? I've seen a couple of things, but not really. Our grocery bill is like the same it's been, you know? It's like we're feeding for what, 5-6 families, and it's just you and I.
Yeah, really.
So if you're withdrawing from a fixed income from a volatile portfolio, inflation really forces you to increase your withdrawal yearly and early. So what happens? Gosh, it's really going to deplete your savings. It's going to accelerate depleting your savings.
Ramps it up, right?
Yeah,
That's right.
absolutely.
Yep.
So this is why some money must grow, some money must guarantee income, some money must hedge with taxes, and guess what? Balance does matter. And you need to work with a financial advisor who can do all of this for you and show you in layman terms. You know, Steve, I got to mention this. When I speak to an individual who actually coming on board because they need to speak with me, and they're very happy to come on board, they said to me, Steve actually did something that nobody has ever done. He took his time, didn't rush me out his office for the next appointment, and he took his time and showed me someone who is educated, who's an engineer, who's this or that. Show me exactly where I am and what you guys can do for me. No one has ever done that.
Yeah, that's what it's all about. You've got to know 3 to 5 times more than they know about their portfolio. And you really have to be prepared. And, you know, it should never be like, hey, this is a sales presentation. No,
Right.
It's not. It's showing that prospective client here are all the benefits that I bring to the table, and then they're going to analyze the benefits and say, are these benefits, are they good for me? Am I better off with the Hollands or without them? And so many people say, yeah, I'm a lot better off with them, and that's why we do what we do. You've got to help to educate the client and walk them through all of it. And when we schedule a session, the second session that we schedule, I schedule it for 2 hours whether we need it or not.
Right.
Because the last thing I ever want someone to feel is that we're rushing them or they're out of time. Doesn't work that way here.
727-228-6449. Told you I'd give you the number again quickly. 727-228-6449 for the Holland Group Retirement Wealth Advisors, or the website is askthehollands.com. Click top of the page, book for a discovery call. You pick the time and date, and the Hollands will meet with you at that time. It is totally in your hands. They're making it as easy as possible. So call the office at 727-228-6449 or go to the website, askthehollands.com, top of the page, click on the discovery call. You pick the time and date, simple as that. Steve, let's talk about building your own pension, because you guys can essentially help build the old school pensions and that guaranteed money that comes in. You guys can help clients build that in sort of a modern fashion.
Oh, we certainly can. You know, it was a really, really popular phrase by our parents' generation, and it will be there someday very soon, Elizabeth, is using the phrase, the good old days. Remember the good old days. The good old days for our parents was this. They worked very hard. They retired. They had a pension.
Yeah, my father had a pension.
They had a pension, and they didn't have to worry about the stock market.
No.
So many people didn't care about the stock market. They kept their money in a bank CD.
Yep.
Because CDs were 6.5%, 7.5%, 8%, and they had their pension. They had some money in the CDs, and they had Social Security. Life was simple. Life was wonderful. These were the good old days.
I remember my parents trying to figure out who's going to get a better rate of the CDs. I think they would run up to like 19%, 16%.
Oh, yeah, at one point, in the early 80s, rates were crazy, crazy high. And banks were giving us gifts. Yeah, you know, if you invest in a jumbo CD, you get a new toaster or possibly a blender or
6 glasses. My parents got a tumbler for water. I mean, it was just little gifts that they were just so tickled to have it.
So here's an idea that I think is very, very appropriate for so many people out there listening right now. We can replicate what pensions used to do. And we do that by allocating a portion of your 401k to an income annuity. Not all of it. You never invest all your money in one thing. That's just dumb. Everyone knows that.
Oh, wait a minute, Steve. We have seen some advisors out there who have done that.
Yeah, that's just really stupid. But so we take a portion. Now, your portion may be 20%. Maybe it's 30%. Who knows? We'd have to find out what works for you. But we take a portion of your 401k. We go into an income annuity, and we create a personal pension. Again, I want to emphasize, we're not taking all of your money doing this, just enough to cover the essentials. What are the essentials? Property tax, insurance, utilities, food. Let Social Security and your pension cover the floor. Then we invest the rest of your money into the market. Yes, we're going to invest in some stocks and bonds and things of that nature. But this is going to cover your traveling expenses, your lifestyle expense, your inflation growth. You know what? If the market crashed, we don't ever want to say to you, oh, well, sorry, now you can't pay your property tax. No, we want sorry.
Try that.
You can't eat. You can't eat. You don't have enough money for food. No, that would be stupid. So, again, we separate this. Psychologically, it changes everything. When your basic bills are covered, no matter what the S&P 500 does, retirement becomes enjoyable. And this is what we do with many of our clients. We look at their entire budget and we say, what are the essentials? What are the non-essentials? And then we divide it up and structure it this way to make sure they will not get hurt.
Now, you guys have worked with many retirees, obviously, over the years, and there have been market downturns. We had the dot-com bubble in 2000. We had the financial crash in 2007 through 2009. We had COVID, obviously, in 2020. But you have worked with people and you've helped them plan. You've helped them reposition savings and direct people to help reduce that income anxiety. So I know this is something you guys have done over and over again. Does anything stick out?
I want to mention one thing, which we don't hear too many people talking about, and we need to talk more about it, is divorced individuals, because that income now is really have changed in their life, totally changed, and they have to, whether it's male or female, basically have to start from the beginning, and we have to prepare for them with a new income. We have to prepare their taxes differently. We have to take a look at their estate plan. These are the things that we see when someone gets divorced. It is crucial to sit with us.
Or when one spouse passes away. That's a similar situation because the income stops. One Social Security benefit stops. Their filing status changes. Yeah. So we have to look at the new household income. But you're absolutely correct. These are two areas that are very, very important to look at. I would say, MJ, that what sticks out the most is when somebody says to us, things have changed. Yeah. Here's my new norm. And again, it's the death of a spouse. It's a divorce. It's somebody suddenly losing their job and they're only 53 or 55 years old, which we consider very young because, you're 55 years old. You're going at least 7 more years before you can even get Social Security, let alone Medicare.
Folks, whether you're 45 or 65, this conversation matters. Your 401k was built for accumulation. Retirement requires distribution engineering. It requires income stability, tax efficiency, inflation protection, and this is what the Hollands will do for you. Do not start a 30-year retirement without a map. If you don't have a map, you could end up in a trap. If you like today's conversation, if it made you realize that you don't actually know what your 401k paycheck looks like, now is the time to get a hold of the Hollands. 727-228-6449. That's 727-228-6449. Just call the office. 727-228-6449 for the Holland Group Retirement Wealth Advisors. Also, don't forget the TV show. It's the Holland Group Retirement Wealth Advisors TV program, Retirement Success, and that's on Sunday mornings at 11:30 on Channel 10. And now Steve, Elizabeth, and Alicia from the Holland Group Retirement Wealth Advisors will answer your email questions.
Tampa Bay, this is Alicia Holland, DiBernardi here, advisor with the Holland Group. We are answering your question of the day, and I have Elizabeth Holland with me.
Well, thank you so much, Alicia. This has been a pleasure working with you. I love the fact that you take the time during the day to answer our questions because you get so many questions and you handle all the questions and you pick what is going to be more conducive. Or I think you will want to ask you, how do you pick these questions?
There are so many to choose from that I can't choose them all at the same time, but I keep them on my radar and save them.
Oh, okay.
Yeah.
All right.
Because I want to make sure we're really addressing the questions, the concerns, and what's on the mind of our listeners and viewers, because I always say it, that's such a perfect reflection of what is representing what even our clients that work with us are thinking and feeling. So pretty reflective of what's going on in the community here. So it's always good to try to get back to everybody as best as we can.
Well, good for you. I'm glad that you're on board. Okay. So tell me, who is the next listener?
Sure.
And where they're from?
Karen is from Seminole, and she wrote in to say, we're considering downsizing. Are there any financial benefits to selling our home and renting in retirement? I know you have a lot you could talk about on this topic, Elizabeth. I just thought of one thing. I think about personal experience. I think about my mother-in-law, and that's one thing that she did. She sold her house and she used the profit of what, of course, paid back the bank, the rest what was left outstanding on that mortgage, and then the excess funds that was her true profit. She used that to live on, and it was spent down faster than she had anticipated. And I always say it.
So she'll be living with you and Anthony.
Anyway, so no. So I always say, and Anthony says it too, he wishes that what he knows now after working with us and being educated in this industry, he really wish he had that same knowledge back then to help out his mom. Because let me give a few thousand here to this grandchild and help this one out and you need a new AC and you need this or that.
A new car.
Yeah. And she's such a giving, loving human being that she just put herself last.
Wow.
And she is renting in retirement. And I found the current place that they are living in now because I stuck to the budget and, of course, wanted to get them close to us. And, one of the things that I think about is what she goes through, which is sometimes she does wish that she did not have a payment for living and that she didn't have a rent that had to be paid, even though it could have been. And this is a lot of what ifs, right? If she still had a mortgage, depending on when she locked in that mortgage rate at the time, it could be a low payment. Or it could be no payment right now. Wow. It's very hard to say. Mm-hmm. But right now, she's still stuck with $2,200 a month to pay for her rent. So there's a lot of things that go into this. And it really does depend on all the other financial variables going on within your world, Karen, to really give you some good insight. Sometimes it's a great thing. Sometimes it works. Other times, it does not always work because my mother-in-law is 78. Imagine being 78 when year after year your health is not getting any better.
No, it doesn't.
And you have to physically pack up your home and move every 2 years.
Wow, so that's really not good. So Karen, I would have to say on just a quick comment on this. For downsizing, you also, if you're able to downsize, are you going to use that money to invest when you pay off the rest of the debt that you owe to the bank? The bank, right? So basically, I have to say it's really important for you to really speak to a financial advisor. Give us a call. Let's have a conversation. Let's go through this. Alicia, your mother-in-law is not the only person that goes through this.
Yes.
You see this quite frequently.
Yes, we do. All right, Karen, thank you for that question. And thank you, Tampa Bay. Keep those questions coming in.
Hi, it's Glenn Beck. Let's face it, these are uncertain times. We're bombarded with news of political chaos, economic instability, and a world that feels more unpredictable than ever. I talk to so many people who are wondering, what does all this mean for my retirement? Here's the truth. You can't afford to leave your financial future to chance. That's why you should talk to Steve and Elizabeth Holland and their team at the Holland Group, Retirement Wealth Advisors. I've known Steve and Elizabeth for many years. They are people you can trust. I trust them, and they understand the challenges we're facing and know how to help you protect what you've worked so hard to build. They help people just like you create a retirement plan that's built to weather the storm. No cookie-cutter solutions, just honest help from a team that truly cares about your future. Don't let the chaos rob you of your retirement. Call Steve and Elizabeth Holland and their team at the Holland Group Retirement Wealth Advisors now. 727-228-4674. That's 727-228-4674. Take control of your financial future today with the Holland Group.